What is up, YouTube? Daniel here, and we are back again on my channel, Life with Dan, where we go into different business topics like stock market investing, entrepreneurship, financial, and life decisions. I know it's been a couple of days since my last video, and my schedule's a little scrambled up, but I do promise to put out at least one video at some point every single week. I've just been caught up the last couple of days with keeping up on researching the stock market, earnings reports. I've recently took on some new personal endeavors and things like that. But with that said, for today's video, I'd like to take you guys over my portfolio again, because like I mentioned, the past couple of days, there's been a lot going on, and I have made a lot of changes, a lot of decisions. I've even sad to say taken a couple of L's. The past couple of days, I've actually been staring at that wall over there, just standing at that corner, trying to figure out what I've been doing and why I've made the decisions that I've made. No, but actually, I've been doing a lot with my portfolio, and you know, as election comes closer, and as the market continues to be just crazy volatile, I've been making a lot of moves, and you know, I've just got to live with them. But that's what this video is about: showing you guys those moves, being completely transparent, and just letting you guys know where my mind is at now. Like always, if you enjoyed today's video or find any value in the content, I would appreciate if you could hit the like and subscribe buttons, because it really helps out the channel, helps me grow, helps me keep things going. But with that said, ladies and gentlemen, let's talk stocks. We'll get into all that right after the intro. Now, if you caught my video from 2 weeks ago, you'll remember that I made a bet on Fastly after their stock dropped more than 25% in after hours after they came out and made some adjustments to their third quarter preliminary results. They basically came out and said that their biggest customer, TikTok, and a few of their other customers ended up using their services a little bit less in the third quarter than was expected. As a result, their revenue was anticipated to be a little bit lower. Now, when this update came out, people did freak out a little bit because TikTok, their biggest customer, I think makes up a little bit more than 10% of their total revenue. So for them to come out and say that they were going to be using Fastly services a little less was quite alarming. But it made sense that this happened as we looked into it in that video, as Fastly was dealing with headwinds with regards to whether or not they were going to be able to continue operating in the United States. Now, you'll remember in my video that I said I'd be making about a $2,000 investment into Fastly and holding for about a quarter, so no more than about 3 months. With their earnings report coming up, I was hoping that we would see a turnaround, maybe some good news to get investors more excited about the stock and get more money coming back in. But as we can all see, Fastly reported earnings yesterday and nothing happened with the stock. In fact, it is actually broken below where I said it might not break, the mid-70 range. We are now seeing Fastly trade in the 60s. So it is definitely in a downtrend, definitely bear territory right now for Fastly. But after listening to the CEO, after listening to Joshua and the CFO talk about what they see going forward for Fastly, I'm actually a lot more optimistic, and I actually bought more stock after I tuned in. The CEO is basically very optimistic. He said he's never been more bullish on his industry and specifically Fastly's business. They're steadily growing. They're steadily maintaining their customers, which was a highlight of that commentary that the CEO made. They actually made the comment at one point that they had only cracked into their addressable market in the single digits. So not even 10% of the market that they could be addressing has been tapped into yet. Their recent acquisition that I also covered in my video seems to have them excited going forward with regards to the revenue that this company is already bringing in and the margins that it already has going for it. So to give you guys the updated look on my Fastly position as of 10 a.m. Thursday, October 29th, I now have 40 shares of Fastly with an average cost of $80.32. That one hurts a little bit. That one definitely hurts, guys. You know, I was wrong with the call that it wouldn't break below the mid-70 range. You know, definitely a bummer. Now I've got about $3,000 into the stock, but I'm down about 500 some. As you guys can see there, I'm actually down exactly 16.13% as of 10 a.m. with, my total return being negative 518. So it's very uncertain what I'm going to be doing with Fastly going forward. I want to see this turn out. I want to see this flip around for me, and I definitely want to make some money on the stock. It's only been a couple weeks, of course. I'm thinking a bit ahead, but it's been that volatile of a market. It's dropped considerably, and I'm just trying to be prepared, trying to not make the same mistakes again. So yeah, that's kind of where I'm at with Fastly. Will I continue to average down my cost? If it drops more, yeah. If it continues to drop, even gets down into the 50s, at that point I'll be like, okay, well, can't not take advantage of this and just stare at my position being down. So, I would definitely buy in some more at that point. The important thing here is that I continue to do the research. I'm going to continue staying on top of Fastly. Any bit of news that comes out on it, I'm on top of. And, I'll update my thinking on this position as I go. But that's the first thing I wanted to cover with you guys, the changes to my Fastly position and how I'm thinking about the stock going forward. I'm sharing this all with you guys so that we can grow together, so that you can see the real life changes that people have to make, the decisions that you have to live with, and hopefully we can all take this and grow as investors. Now, the next thing I'd like to go over with you guys is positions that I still have that I've been adding on to in recent weeks. If you guys were able to watch my second video where I revealed my Robinhood portfolio to you guys, at the time I had about 45 shares of Workhorse stock, as you guys can see here, at an average cost of $15.36 for a market value of about $756 or so. Now, as you guys can see here, I have 70 shares of Workhorse. This is as of 11:15 a.m., Thursday, October 29th, for an average cost of $16.92. Market value sits at $1,191. When it comes to Sonos, the first time I showed you guys that stock when I made the video on it, I had about 50 shares of Sonos stock at an average cost of $12.93. Market value was only about $650 at that point, as you guys can see here. But now that I've added on to the position, I have 80 shares of Sonos stock. Average cost has gone up a little bit to $13.46, again as of 11:15, Thursday, October 29th. I'm continuing to feel pretty good about both of these companies going forward as long-term positions. When it comes to Workhorse Group, I know that many of you saw that it had a big rally midway through September. It actually hit about $30 a share at one point. And I actually didn't take any profits then. I had a very small position and I didn't really see how I could justify selling out of my stock yet. So now that I've been adding up, I want to continue adding, and hopefully if that were to happen again, or if the stock continues to grow going forward, especially if we get an update with that the UPS contract, I think there's a lot to look forward to with Workhorse. Same thing for Sonos. I've been adding onto that position confidently, even after Apple had announced that they will no longer be selling Sonos products along with Logitech products. The stock didn't really see that big of a hit, which is fitting, as we know from my video that I did on Sonos. Sonos has actually been investing a lot into its direct-to-consumer sales channels, and that has been proving to be pretty profitable for them. Both of these companies are due to report earnings the first couple weeks of November, so they will both be coming out with their earnings after the election, and I gotta tell you, I'm pretty excited for what both these companies have to report. If we see some news from the United States Postal Service with regards to that contract and whether or not Workhorse is going to be one of the receivers of that contract, I'm sure we're going to see a lot of movement on that stock. And at that point, I will be forced to reanalyze my position, look at how up I am if that happens, and consider what to do going forward at that point. With Sonos, I am expecting a good quarter as people get ready for the holidays, and I'm assuming buy, Sonos products for gifts and things like that. I am expecting good numbers, not just for this November quarter, but also the one right after that, that'll report, what happened in November, December, things like that. I think we'll get good numbers 2 quarters in a row with regards to Sonos. So I'm definitely holding these companies for the long term. I plan on getting 100 plus shares of both of these companies, and just continuing on with them. Now to go over Boeing stock. Boeing stock. Boeing's a tough one, guys. As you guys know, Boeing reported earnings yesterday on Wednesday morning. And this article pretty much puts it as best as it could be put. It could have been worse. This earnings report left a sour taste in my mouth, I gotta say. And I was really hoping to hear better things from the CEO and the CFO with regards to what is coming up for Boeing. Things are moving, recertification of the 737 is close, back orders are not as bad, but they're going to make more layoffs. They plan on being cash negative until 2022. They don't think things will really start ramping up until midway through next year. And, it's just not a good going right now for Boeing. Besides the certification of the 737 MAX in the short term, guys, I really don't see very much that could excite the stock, to be honest with you guys. Now, I see the same thing happening a lot on YouTube, especially amongst newer investors, because I did it myself. We're making videos that are bullish on Boeing long term. And, people are saying, it's a good stock to buy long term. Right now it's cheap and it's good to hold for the long term. That's a really safe call to make. That's a really easy call to make because when you think about it, of course Boeing's going to be okay long term. It's such a big and powerful company. Before losing all of this value, you know, it's a several $100 billion company. And with the resources that it has, the government support that it has, all the companies that rely on it that would be willing to help it out, I'm sure, in some way, you know, it's easy to call that Boeing's going to be okay in the long term. But the thing that I'm struggling with right now is missing opportunity elsewhere, while you're pretty much guaranteeing, you're saying to yourself, this money is going to do nothing for quite some time. I've had the stock for several months now, and I've been, you know, break even, slightly negative like I am now, slightly positive. It never got, you know, too crazy with how positive I was. And, you know, with the exception of the big jump it made from March to, you know, a month after that, if you were someone that caught it when it was below $100, you know, with the exception of that, the stock hasn't done very much of anything, you know. So when I made the video on Boeing and how bullish I was, which by the way I still am, long term, I wasn't really realizing what I was doing and what I was advocating there. I was advocating putting money into Boeing now. And, you know, basically just accepting that your money will do nothing for some time. It seems pretty clear what Boeing's path is in the 1 to 2, maybe even 3-year time span. It's going to be a while before they recover, a slow recovery. So do I want to bet right now on a slow recovery when I could be betting on something more certain? You know, I think as long as you don't miss the big break, right? Like that one moment when something revolutionary happens in Boeing, as long as you don't miss that, you don't really need to be holding a stock that you know is going to do nothing for some time. It's just, why hold it? Now at this point, I gotta see out the recertification of the 737 MAX, right? At least. Because if there is some kind of bump, I deserve it after having held, you know, this summer, watching all these other stocks jump up like crazy and Boeing do nothing. Now, I should have known that, you know, as an investor. I should have known that a manufacturing company like Boeing, with the industry that it's in and how heavily hit and damaged that industry is, I should have thought twice, like, hey, yes, this is a good stock for the long term, but I've got time. I don't need to jump in now. But these are those kind of things that no one tells you as an early investor. You know, you just got to learn these things on your own. It was too early for Boeing is basically what I'm saying. It's out there, guys. But that's how I'm feeling about Boeing. Looking to wait until the plane gets recertified, the 737. But I'm not really loving the stock much more after that. Now, another thing that I'd like to share with you guys is the fact that 2 of the stocks that I recently held in my portfolio, I no longer hold anymore. I completely sold out of them, and I gotta say, one of those guys was a big mistake on my part. Recently, I made the decision to sell out of both SPG, Simon Property Group, and PINS, Pinterest. Now, each individual stock has its own reason as to why I decided to sell out of it, and that's what I'll be going into right now. So with regards to Simon Property Group, the story is very similar to that of Boeing. I just realized that my anticipation for the big flip that Simon Property Group would see as far as its stock is concerned, my anticipation of that came too soon. It was too early. And basically the experience that I had with Boeing over the summer, you know, these past couple of months, is pretty much about the same experience that I've had with Simon Property. Simon Property at least paid me a dividend when you compare it to Boeing. It paid me twice. So that was at least a nice turnaround. If that money had been in a savings account, it would have made nothing. Now, the reason I still hold Boeing and not Simon Property is because I realized that the potential for the 737 MAX to cause a bump in the stock was higher than that of what we could potentially see with earnings that Simon Property would be reporting. And my outlook on Simon is similar to that of Boeing. I still think Simon's going to turn things around. You know, being the leading mall owner in America, I just think that Simon has a lot going for him. The balance sheet to weather COVID, and with the acquisitions that they've been trying to make, I just don't see how Simon, long term, doesn't turn things around for itself. When it comes to Pinterest, though, I still stay up at night thinking, why? Why, Dan? Why? So basically, guys, I decided to sell out of Pinterest in the high 40s I thought I had taken a screenshot of how up I was at the time, but I'm not sure that I did. If I did end up taking that screenshot, then it will be put up on this video. But I basically sold up more than 100% on Pinterest when it finally came down to it. Basically, I just looked at it like this. Okay, I'm up more than 100% on Pinterest. You know, their earnings report is coming and it could go up some more. But at this point, I've already sold out of Pinterest enough. I don't have, you know, a crazy big position where that money is worth to keep in there. But I was wrong, because as you guys saw yesterday, they completely blew out their earnings, beat on the top and bottom line, and even put out some pretty nice forecasts for Q4. Now I gotta tell you guys, that one hurt. So, as someone that needed the capital at the moment, with regards to basically, when it comes to Pinterest, guys, I realized what I had too late. Pinterest is continually growing its revenue, continually growing its monthly active users, bringing on new advertisers, everything that you would want out of a growth tech company, it's got going for it. Why I decided to sell, I really just had a very, very, very small mindset in that moment. I thought to myself, you know, up 100% is good. You know, I shouldn't be greedy, I said to myself, with this. Let me just take this because, you know, I'm either break even or, you know, barely up on the other stocks. I've had Pinterest for more than a year, so selling now won't tax me. So why not? You know, and when you look at it that way, it kind of made sense, but I should have waited at least till earnings, basically. I still believe in Pinterest as a company, and if there's any type of correction, if it were to come back down to the 40s, say, I would be interested in buying back in. It was a mistake to sell out, and I just got to carry that L with me. I shouldn't have done that. Like I've mentioned before, Pinterest is the first stock that I ever bought. So I really turned my back on it, man. Really turned my back on it. I shouldn't have done that. And now I'm learning my lesson. Now, to put things into perspective, I've only been a stock market investor, you know, about a year and a half now. So I'm trying to get everything as I go. I'm learning these things quickly. Luckily for me, I'm making a lot of the types of moves that an investor would make throughout a lifetime, and I'm getting to learn from mistakes right away, which I think is going to benefit me in the long run. When you get down to it, I haven't really lost money on any of these investments. I usually, if I do sell out and it wasn't like a you know, winning position for me, I at least sell out break even. I tend to not lose money. I try to avoid that. If I do realize some losses, then it's probably to make up for the fact that I'm going to get taxed on some short-term gains that I recently made, like Tesla earlier in the year. That was a position that I didn't have for longer than a year or so. I'm going to be seeing taxes on that come tax season. But yeah, so I'm out of SPG, out of Pinterest. Like I said though, guys, we got to live with our decisions and learn to move on with them. So I'm hopeful that in the future, I might have an opportunity to get into Pinterest again, because now that I have seen the light, now that I'm awake and realize what's going on, Pinterest could definitely be a triple-digit stock in the future, and I should have never let that one go. So that's it on that one, guys. Last thing I wanted to share with you guys with regards to updates to my portfolio. You would have seen it first if you followed me on Instagram, but I recently made the move of buying a little bit of Bitcoin. I actually did it through the app Coinbase, though. I decided not to do it on Robinhood, and I'm going to be doing a whole separate video on why that is, on why you should actually not buy Bitcoin on Robinhood, in my personal opinion. But I recently bought some. As you can see here from this screenshot, the exact amount of Bitcoin I bought was 0.017833753 of Bitcoin. So definitely far from having a whole Bitcoin. But you know, I have no rush of getting into crypto. If you saw my video that I did on Bitcoin, I'm starting to see the light with regards to cryptocurrency and where things are going with monetary policy and things like that. So I'm beginning to put money into Bitcoin, and my plan is to hopefully every couple months trickle a little bit in there. Don't want to treat it like I do a stock. I just kind of want to more associate it as something I continue to put money in. But that pretty much wraps it up for this video, guys. I just wanted to quickly go over the things that I've done with my portfolio over the past couple of weeks. As the election comes up, as you know, the market continues to be a super volatile place, I'm just trying to make the moves that I think will set me up for the next wave in the market, you know, with what's going to happen after the election. So for the next couple of days, I'm just kind of sitting tight. Really, it's just tomorrow that's left to trade, and then Monday, and then we have the election day. So it's going to be an interesting couple of trading days, and we'll see what happens. I don't plan on putting any much more money to work. That being said, I just kind of want to watch, and if a new scenario takes place in the market after November 3rd, then I'll get ready and be locked and loaded for then. But thank you guys for tuning into this video. I appreciate you guys taking the time to check out what I've got going on in my portfolio and to hear me out with regards to the things I'm learning as I continue to invest. If you guys found any value in today's video, like I always say, I would appreciate if you could hit the like and subscribe buttons to help me grow my channel and keep me making content. And with all that said, guys, happy investing. We'll see you next week here on Life with Dan.